Does this remind you of anything? I mean, a year ago, exactly this employment report was when we had the very large downward revision, the downside surprise, the downward revisions, and the BLS commissioner lost her job. Right. So now just looking quickly, and I can't, do all the details of this, government education was a big decline. And one of the things that happens in the summer, it can be really tough with like the school calendars. And if things slip a little bit with the seasonal adjustment, you can get some kind of squirrely numbers in terms of the education. That certainly is at play for the downside miss today. That was something that was very clear in last year's numbers as well. So I don't want to, dismiss this. And of course, that was a shift from we'd had a strong labor market to like, whoa, maybe it's not so strong. So I do think there is signal here. There's probably a fair bit of noise and some seasonal issues that'll look through. The unemployment rate did tick down.
Right.
I think the one thing that for the Fed that's maybe of most interest is wages coming in soft.
Yeah. I'm getting out my HP12C calculator because Constance Hunter, I wouldn't do this for Claudia, but Constance Hunter jumped in. Here's what we're going to do. Can we do this in the control room? Can we rip up the script and have Claudia and Constance together? Did you check with their people?
Yes,
and they say it's okay.
Yes, I said it's
Constance
okay.
Hunter getting wired up right now. Again, folks, futures up 32. They advance. NASDAQ lifts double, up 0.8% here. And the yield, again, the 2-year yield is the most elastic in it of 4.16%. Damien, ask a smart question to Dr. Sahm while I figure out the 3-month moving average on my HP 12C.
Well, Dr. Sahm, I mean, average hourly earnings down 0.1% month over month. I mean, you mentioned the beige book before the break, right? And, what did the beige book show us? That consumers are adjusting by taking on more debt, buying less, but shopping more frequently, trading down to cheaper alternatives. Is this really wearing on them now? I mean, what does this all mean for the consumer?
So certainly on the consumer side, this is not good news. I mean, paychecks are such a key driver of consumer spending. Not the only driver, but this is a soft reading. I think the one where, the implications maybe come out the strongest for this is on the Fed side. The thing that would get the Fed moving towards rate hikes the fastest were if there was any sign of overheating in the labor market. This is exactly the opposite of overheating. We hadn't seen wage growth really picking up, but we really hadn't seen it slowing down much. And so this really takes, like, the labor market isn't pushing up inflation. And frankly, if it softens, it might help hold down some of that inflation.
We are so advantaged. Claudia Sahm, New Century Advisors, and joining us now, Constance Hunter, Chief Economist, EIU, the two of them together, commercial-free across America in this half hour on yield. Christina Ketman of Invesco will join us here in a bit. Constance Hunter, you're over there working on the terminal, looking at the numbers. I got a 90-day average, a 3-month moving average, subject to revision, of 20,000 per month on jobs. You can give me all your academics, Claudia Sahm, I don't care. Mm-hmm. Politically in America, in defense of the president, that's an unacceptable statistic for America, to see a 3-month moving average of 20,000 jobs per month. It doesn't get it done.
Well, we don't think it gets it done. I'm going to take off my headphones.
Please take
Please, take your time.
Okay.
So I'm echoing in there.
Oh, you're echoing.
I'll put them back on to hear Claudia.
Okay.
But in any case, last year when we had changes to immigration, when we were deporting a number of people, there was widespread speculation that actually the monthly requirement had fallen. This year, what we saw with jobs, with payroll numbers increasing monthly, but the unemployment really not coming down significantly, is that, well, maybe it's higher this year. This 20,000 over the last 3 months, and then that fall in the unemployment rate, that is not a good look for the president. You're right. And it bolsters his case to cut rates. He's going to keep beating that drum. I think this bolsters our call for a hold. This is definitely warrants a hold.
Claudia, does this study that we're seeing right now, can government officials in the Fed get out front, or are they colossally ex post where they just have to wait for the data before they go flat or cut rates?
So, I mean, policymakers never have a full picture of the economy when they make a decision. It takes too long. And we always want one more piece of data, one more piece of information. But when you have enough questions or you have enough tension, that certainly can be, a reason to move a little more slowly until you get a decisive signal. I mean, I don't think today's data are decisive in
Yes.
reshaping that we've had a largely balanced labor market so far this year, but they raise some concerns. And we'll, get more on inflation. We'll see if the disinflation is sticking or not. So you get what you have, and you have to make a decision.
Did you
but this
see how she
isn't.
did that?
Yeah, she did.
She did. She's such a pro. Today's data wasn't decisive. Is there ever an economist who's ever said that today's data is decisive?
Well,
Damian Sassauer with Constance Hunter and Claudia Sahm.
Well, Constance, I mean, I'm just looking at SOFR futures here. I mean, I see whites up a tick to a tick and a half. Reds are up 2.5, 3 ticks. I mean, so, obviously what we're seeing here are yields down, price up. And is that the right, is that the right reaction to this? And just how much do you think the market's going to rush to price September out of the equation? Is that what we're looking at here?
I think the market will begin to price September out of the equation. I think Claudia's right. Tom, I was almost going to say to you, you never look at just one number. And of course you don't, but you preface your question on the 3-month moving average, right? And I think that's what we're talking about here. One piece of concern, right, is you saw the unemployment rate fall for bad reasons, not good reasons.
Discuss
right? Because
that.
participation fell.
Stop. People flunk exams. Who would that be, folks? Because of that. Where the unemployment rate goes down for bad reasons. Discuss, Dr. Hunter.
Well, certainly if you see that participation rate decline, it's only 1/10, but it's enough that we saw this low growth of jobs and we saw the unemployment rate fall. It suggests to you that either there's low supply, along with low demand. That is not a robust labor market situation. And, I was looking before I came on last night, I got buried in data as I sometimes do. And if you look at the Fed's financial conditions index, it suggests that we have tailwinds. Now, those tailwinds are diminishing, but it suggests that monetary policy is loose here. Yeah. And if we have loose monetary policy and a budget deficit of 6%, and this is the best we can do, I think it begs asking some questions about the underlying economy.
Yeah, I mean, look, Constance, and the equity market agrees with you. I mean, it is rallying here. I mean, they see exactly what you see. This is an excuse for them to price out rate hikes, to basically get dovish, and that is great for for risky assets. And so, shifting to you, I mean, Claudia, just talk to us a little bit more about what's the thought. I mean, does this take some of the ballast out of what next week's inflation print is going to look like? I mean, what are you looking for next? What's the next big figure that you're going to lean into data-wise?
Well, absolutely. The inflation data are front and center, right? And you want to see, we got a very soft inflation read for June. We don't expect that to show up again in July exactly that way, but you want to see some softness, or at least getting back to something that's consistent with target, right? And so there'll be a lot of attention to the CPI, the PPI, the import prices. I mean, inflation is still front and center because inflation is still very far from the Fed's target. Right. And and if nothing else, you want to see it moving in the right direction. Today, we're seeing employment move in not the right direction. Maybe next week we'll get some better news on inflation. But I don't think this takes any pressure off of the CPI. And before the Fed meets again, we're going to get one more payroll. And we've got next week's CPI and another one. So there's a lot of data to come.
Across America, a real treat. Together, Claudia Sahm with us today from New Century Advisors and Constance Hunter of EIU off the shock report. We're up, futures up 39 now. NASDAQ is up a solid stick, 1%. On the NASDAQ futures as well. Even Bitcoin vaults up $700. Constance demanded that I quote Bitcoin.
Oh, yeah. I'm a big Bitcoiner.
81.57 on Brent crude right now. In the most elastic yield, the 2-year of 4.15% in a solid 9 basis points. I'm going to call that a ginormous move, and even the 10-year in 7 basis points. I want to go to your two wheelhouses. Claudia, let me begin with you with all of your deserved acclaim over recession. We've had a pop in nominal GDP. John Riding over Breen notes consumption and investment 8-ish% like a banana republic. Do you just assume that if we have a tepid job economy and we don't cut rates fast enough, that nominal, the animal spirit, comes down to a more lower normal rate?
So I am concerned if the labor market isn't firing on all cylinders, and certainly if it weakens, that would be an issue. And we got recent data again. I mean, the labor share continues to drop, like the share of the income in the economy going to workers. That does not feel like a good situation. And I think, to Constance's point, I worry more right now about the structure underpinning the economy than maybe the cyclical, the boom bust, the reset. It's like, because things are moving under the hood of the labor market. And I think that's the labor force growth, population aging, what's happening with AI. So there's some really big themes that I think we should pay attention to, and maybe less to the boom bust cycle, right? Because I'm not sure that's the biggest thing happening right now.
Constance, the EIU remit is a wonderful global remit. What does this jobs report signal to other central banks? I mean, it simply takes away the effervescence, doesn't it?
You know, I would say other central banks are going to look much more closely at CPI data next week than they are the jobs data.
Sure, agreed.
But of course, it does, to Claudia's point, right? It's what's going on under the hood here. And we have an aging labor market, we have an aging population. We're seeing people age out of the labor market. That is not a unique problem to the United States, right? We see this around the world. This is a challenge for central banks. And one could argue that is the biggest challenge for Japan. And one of the reasons why we have the situation in Japan where they have a very high budget deficit or debt to GDP ratio, right? And there's concern about that fiscal situation, and it was getting expressed in the currency. And we had the intervention that we had last week. So this theme of, how do you grow an economy with an aging population? Does AI help or hinder that? These are as existential questions, I think, that all economists, central bankers or not, are looking at when they're looking at economies right now.
And yet there's a desire to keep financial conditions loose here in the U.S., like you rightly point out. I mean, talk to us about what you learned from yesterday's refunding announcement. I mean, they just, in my mind, kicked the can down the road again, right? I mean, you're right to focus on fundamentals like debt to GDP here in the U.S., but the market has not paid attention to that for so long. At what time the things at least start to flash amber to you, Constance?
So Warsh has his task forces. We have our task forces. So there's a few things we're looking at that we felt we had to really do a deep dive. And to your point, Tom, a cross-country comparison.
Right.
And right up there is what is fiscal space? What constitutes fiscal space? When does it get tricky? Who obviously we see it's not uniform across countries. And so I think one of the things we have to think about here is what is expected inflation, and how does that feed into term premia, and then what's that feedback loop to funding the government? Christina
Kamenian does. Her people are quite upset. I mean, she needs more airtime. Claudia Sahm, last question to you, with immense respect for your academics, and it's just simply you're launching forward, I guess, into end of August, Jackson Hole, and into September as well. It's still two Americas. The political reality, Kevin Hassett with Bloomberg in the 10 o'clock hour, folks, Michael McKee and Danny Berger. I'm sorry, Claudia, and in economics on a jobs day, it's two distinct Americas, isn't
it? There's a lot of division in the labor market. I mean, the division I like to focus on is this low hire, low fire economy, right? For workers who have a job, like their job, it's a good job. This still is a pretty good labor market. Today's numbers notwithstanding, for people trying to get back in, trying to get in for the first time, this is tough. And this wage growth is not keeping up with the price growth. And that's a bigger problem. So there's a lot of divisions here.